Welcome. And we're back with another episode of Off the Record with KyleSellsBiz. I have another very excited special guest with us today. So I'm excited to have Stephanie Magurno, who's going to be talking a little about streamlining businesses and getting prepared for exits. If you're tuning into this programming and this is your first time, we hold these weekly LinkedIn Live podcasts, and it's being streamed live on LinkedIn, YouTube, Twitch, Twitter, and Facebook. So we have some comments. If you want to leave a comment or a question, we will get to those throughout the broadcast or maybe at the tail end. Appreciate you joining in every week on these talks. We bring a different guests, different background. We have guests that talk about finance, funding, legal aspects for business. In this case, we're talking about scaling and getting your business ready for an exit. Most of our audience are either business owners that are preparing to grow their business or advisors of businesses that assist businesses in their growth and transition needs. So Stephanie and I connected.
Yes.
Coming back, and we've been trying to get it on the calendar for so long. I think I just believe everything happens for a reason, right, Stephanie? What do you think? Like, we've been trying to put this together for a while now.
It is. And then there was just this, the cosmos aligned. And
Yeah,
here we are.
in the professional services networking world, you meet a lot of cool people that do some really interesting things, and what she does and what I do, there's a lot of alignment and synergy. And we were just talking shop, like, man, the world needs to hear these stories, because it's the stories about working with past clients, transactions and offerings that people want to hear. Those stories, people can relate to that. So I want to do a quick introduction for Stephanie, so everyone knows who she is. Stephanie Magurno has co-founded, scaled, and exited 2 7-figure businesses in the regulated brick and mortar industries with an accounting background and operational experience in professional service firms, manufacturing, not-for-profit, and service sectors. She works as a business advisor and fractional CFO for partners with committed entrepreneurs to grow and optimize their companies. Particular areas of expertise include recruiting great teams, having a complete handle on your financials, of course, systematizing a business to scale. And I just saw your post on LinkedIn that you were a Cultivate Advisor of the Month. I'm hearing a lot of great things about Cultivate Advisors, one of the companies that you're associated with.
Yes, it's true.
What do you have to do to be, Advisor of the Month? Like, what does that entail?
It's a great question. It's a peer nominated and selected award. So people get nominated and selected for a variety of reasons. And in this case, it's because I really care about helping my colleagues and my team. So that is why I was nominated and selected, was because beyond just my commitments as an advisor to my clients, I really work to make sure that my colleagues can also tap my expertise and empower them to learn everything I have to offer too.
Well, I mean, it says a lot, right, Stephanie, when your peers acknowledge all the hard work that you're doing. I mean, again, I love getting acknowledged by clients, but when your peers see your hard work and put you up on that pedestal and give you your flowers, which you rightfully so deserve, I mean, it definitely says a lot. So before we get into the nuts and bolts of our conversation, so today we're going to be talking about streamlining for exit, systematization as a pre-sale strategy. Many business owners, I can tell you how many calls I get from business owners that call me to sell their business, and they don't have the ducks in a row. Their T's are not crossed, their I's are not dotted. They have bad financials, bad books, bad processes, or no process at all. Employees without contracts, legal issues, disputes, you name it. They're operating without permits. I mean, different things that come about, right?
Yeah.
I like to use a simple analogy that most people can relate to. If you're planning on selling your house, right, the first thing you look at is a curb appeal, right? You want to make sure it's nice landscapes. You might want to get your kitchen remodeled, maybe the bathroom,
Mm-hmm.
So it's the same thing. You sell your business, you want to get your business in order and prepared for sale. So we're going to talk about different systems and processes and things that's important to essentially enhance your business. So that's what we're going to talk about. Feel free to jump in with any questions and comments. And I see Jim has joined us. Jim Bishop, appreciate you joining us today. So before we get into the subject matter, What's up, Jim? We want to learn a little bit about Stephanie. Who's Stephanie? What you're about? What got you to this point where you're at today? I love talking to people who have exited their companies. I mean, the stories you can tell from either pulling your hair out or, I don't know, all the stuff that happens when you're emotional stress. And, that's the aspects of selling businesses is a lot. So maybe you can share with the audience a little bit of your background, your experience and your journey to being a CFO advisor.
Sure, happy to. So my first career was in the not-for-profit sector. I ran NGOs for 15 years. And the last year and a half of that, I spent actually working with about a dozen heads of different organizations working in the not-for-profit sector, whether that's, medical care, poverty initiatives, media, et cetera. And then I decided to make a career change. So I went from the not-for-profit to the for-profit sector. And I basically, my business partners and I purchased a business, and then we started a second one from scratch. This was in the bar and restaurant space, but with the regulated component of video poker, i.e. gaming, which is very common in Nevada. And so like I said, we bought one, we built another from scratch, and then we brought them both to break even within a year and a half, which was great, very good for the restaurant industry. And at that point, I had recruited a team and had handed over a lot of my day-to-day functions in accounting and operations. So I was looking at what was next. And one of my business partners, he had been presented an opportunity to get into a completely different business, and which was the cannabis space. And so I helped him vet the opportunity, helped him start the company. And then several months later, he came to me and said, I can't do this without you. That's when I exited the bar and restaurant group and became an investor in that company. You cannot have gaming and cannabis licenses in Nevada. You have to pick one. So I made the leap and I became the controller of the company, doing other consulting projects as well. And after about 9 months, I took over running the company day to day as my business partner pursued a different business opportunity in Florida. So he was supposed to be gone for 9 months, and 4 years later, he was still in Florida and I was still running our company.
Interesting how that works sometimes, eh?
Right.
Yeah.
But I brought it to profitable within 18 months of running it, which is
Awesome.
great. And we built the company to sell. That was the whole purpose. So that was what we did. I brought it to profitable, steered us through COVID. I found the buyer. We went through due diligence and we went through the acquisition process, which in a regulated industry like that it's not like a tire shop or a restaurant. You have to get a lot of approvals. So it's a little bit lengthier of a process.
And then on the lending aspect too, like getting the funding for it, I'm assuming, I mean, you wasn't involved as much because that's a buyer's role, but there's a lot of, when the banks do put those applicants for funding through the ringer to get approval.
Yeah, I mean, definitely cannabis is a very capital intensive industry. So we raised all of our money from private sources. So, the Friends Family Fools model, which is pretty much anything under $1 million. I consider that Friends Family Fools range. So that's how we sourced our investment capital. And yes, the same thing for the buyers. It's not, with bank loans, there's no SBA program for acquiring companies in the cannabis space.
Right.
It is, even though legal state by state, it is still federally illegal. So yeah, and
it's two different aspects, right? One, starting a business from scratch, and one building. You have its pros and cons. There's growing pains in both. Which one was more fulfilling? Which one to you was like, hey, I really enjoyed doing the most, building or starting from scratch?
It's a great question. I guess I would say that building from scratch is a wild ride, and it's harder in some ways, more rewarding in some ways. Of course, when you're starting from scratch, buying a business can be an expensive proposition. So a lot of times people start companies from scratch simply because there's a lower barrier to entry in terms of capital requirements. Not necessarily the case in our industry,
Mhm.
but in many cases that's the case. So yeah, I mean, for me, I loved the creativity of developing unique products and coming up with the whole strategy around a very nascent industry at the time. So I think that was exciting. And so I guess I'd say I lean in that direction.
So I've done both. I've bought
Mhm.
and I've built,
Yeah.
and everyone is different. I feel when you get to the point where you're starting from scratch, you have learned a lot along the way. Because to me, it's riskier, in my opinion, to start from scratch. Like
Very much.
I have a saying, Stephanie: if you can't beat them, join them. Okay, so you look at the most wealthiest people in the world. They invest in companies. They invest in
Mhm.
thriving, growing companies. So you essentially person a cash flow in business, already has employees and processes, stuff we're going to talk about. Why go crazy trying to reinvent the wheel and do it all yourself when you can just take someone idea and then build upon it and make it even better, right? There's
Sure.
really and truly, there's no real new business. It's the same process. There's little tweaks, little innovations. There's new technical components of it, but it's all about is it supply demand market? Is there market demand for your product and how you get it out to the marketplace, and what are your margins and
Mhm.
so on. So when you can have that historical data that you can work off and build projections, it's just much easier. But to your point, when you start from scratch, it's like more fulfilling. It's like you almost feel you can do this. It's like some of you were kind of like born to do, almost like I want to do this from scratch, build it the right way, and bring it to market.
Mhm.
So
Yeah.
I did a poll on that 2 months back. Which one is better? Starting a
What do
business
people
or
say?
buying a business. I forgot what the results was. I have to look back actually and see what it
Yeah.
was. It was a few months back. Um,
Curious.
yeah, I may multitask and pull up while we were speaking, but I'm
Sure.
curious. Like I forgot about it. We did about 2 months ago. I think what was the result of that, but I want to think it was split down the middle. That's probably why.
Okay.
Um, so let's talk about the importance of a pre-sale strategy, right? Why is preparing for an exit crucial? Why is it important to prepare your business for a sale?
Well, it's only important if you care about the valuation. Which is to say, it's extremely important because
Yeah.
who doesn't care about the valuation? So, if you really want to get the maximum value for your company, then it's best to start 3 to 5 years before you want to exit. Second best is at least 2 years. So, having the time to really get all of your ducks in a row, that's key. And I guess there's some things that people always think about when they think of the term exit. And then there's things, as you like to say, that people aren't thinking about when they exit. So in addition to the maximizing value piece, things that you might be thinking about include reducing risks around the transaction or being ready to take advantage of an opportunity. If you've done the groundwork to be able to exit your company and someone comes along and says, "Hi, I'd like to buy your company," you can take advantage of that opportunity. You can also generally move faster through the process. Some of the things that you might not be thinking about when exiting, but really play a key piece in terms of why you would want to prepare for it and have that strategy, has to do with your legacy, employee security, personal readiness. It's quite a shift to go from running a company to not having a company. And then minimizing emotional decisions. So if you've got a very clear strategy, you've got your systems in place, you have everything ready, then you can minimize the reactionary and emotional choices.
I think I'm like remembering from our previous conversation, I realized why we are having this talk today, because almost everything we are so aligned when it comes to these things. Like almost everything you say to a T is what I share my clients, right?
Mm-hmm.
So you mentioned about minimizing risk. So that multiple that a buyer is paying for your business, that's actually a risk factor, right?
Yeah.
So yeah, so they're willing to, the higher the multiple, the lower the risk typically, right? Because it's more potential to make more money. There's less risk in the deal. The lower the multiple, the higher the risk.
Mm-hmm.
And as an owner, you want to de-risk your business in different areas, financial, legal, operations, and so on. And you talk about the growth opportunity, right? So before you decide to to exit, you have to put together a plan. You should already have one, how you plan to grow the business. And you yourself don't have to be the person actually executing the plan, but hey, Mr. Buyer, by the way, I'm about to retire. I'm burnt out. If I was 10 or 20 years younger, here's my growth plan and my growth opportunity. So a lot of stuff that you're sharing there very resonates. And the legacy piece is a huge one, and being emotionally ready. So I'm loving where this is going. Now let's talk about the role of systemization in enhancing business value.
Yeah. So there are a number of components to this, and we could go on for quite some time, but I'll try to stick to some really highlights, some of the key drivers. So number one, systems allow you to show scalability and to scale. So scalability is one of the primary attributes that investors and buyers look for in a business. They want to know they can grow the business without increasing the costs as much as they grow. And systemizing shows that that's possible. Probably the biggest restrainer of business sales is owner dependency. And so systemizing a business reduces that. If you can run your company on 10 hours a week or less, then it is much more saleable. You will get a higher multiple for it. It will be much easier and faster to sell. That is the reality. And if you take that approach and apply it to every key person in the company, so you're reducing key person dependencies, all the better. Also, systemizing allows you to ensure quality and consistency, which ultimately we should see on your bottom line. We'll see it on the P&L, we'll see it in the balance sheet, because that will lead to more and better sales, as well as retained customers. Operational efficiencies can also lead to margin improvement. So again, every dollar we add to that bottom line increases the valuation of the business. So those are some of the high points, I would say.
And those are big ones. And if I had to pick one, I mean, all these are really good high points from my experience. I don't know, I feel like the owner dependency is like a big one. When you're trying to scale your business, you want to get yourself out of the day-to-day operations of the business. So the buyer don't want to have to buy the business and be a slave to the company, right? So, I always try to coach my clients, when you're having these conversations, these management meetings with buyers, it's like the buyer don't want to know that you can't take a vacation, right? You want to know that you can take a vacation and the business can still operate where you're not even being there. So to build a team run business, but the team still needs, in order for you to do that, to your point, you have to have these scalable models to the processes to get to that point. So everything you share here, I love it because it all ties in very, very nicely. Any other components you want to share as opposed to what you shared already to be more efficient?
Yeah, I mean, systemization ultimately it's the process of creating and implementing things like consistent, standardized processes, workflows, and systems within an organization. So what could that look like? It could be standard operating procedures. It could be process maps. It could be automation through technology, really good training and onboarding systems, having key performance indicators and a way to measure them and track them, as well as some continuous feedback and improvement systems. And that's some of the nuts and bolts of it. But in terms of I guess we could say a framework for the components, really we're talking about number one, having clear goals, why you are undertaking this in the first place. Second is a way to really capture data that you can use to do further iterations and improvements. Number three would be scalability. You want your systems to be scalable. And so you have to create them with that in mind. As well as number four, accountability mechanisms. Number five would be the communication channels. And number six, that would be redundancy and backup. So again, avoiding those key person dependencies and then having fail safes if X, Y, or Z happens. So those are all the different components I would say are part of systemizing a business.
Yeah, and when you look at it in its totality, it does seem like a lot. It does seem overwhelming. So essentially, one that you mentioned was the goals. Like, what's your true goal? So like like, for example, in our business, we would throw everything what you said, we would throw everything on a whiteboard and see, okay, which one would actually create a better, which one will make our business more profitable in the short term, right? Which is easiest to implement and which one is a higher return on our time in implementing, right?
Yes.
And then break it down in weekly, monthly, quarterly time frames so you're executing. So like the KPI, establishing SOPs, processes, process mapping and all of that. It does take some time. That's why it's good having someone like yourself to come in and guide these CEOs, founders of business on how they can get to their end goal. Let's talk about what are some first steps a business should take when considering systemization as a pre-sale strategy?
Excellent question. So the first steps I would say are identifying the goal of the endeavor, then conducting an analysis, and then prioritizing the areas of focus. You might swap analysis and prioritization there, but what's the goal? And I'd say if you're really looking at an exit, then there are the two biggest areas to focus on in terms of what the goal would be are profitability and ensuring there's no or very limited owner dependency. So if those are your goals and those are the things that you have in mind, because there's other things that you could have in mind, but if those are the two things, then you analyze, review the business and the different areas of operations to identify what are the gaps that we need to close to get there. So once you have that analysis, then you prioritize because there's a million different things that anyone can do at any given time. So this is one of the things that it can get really easy to get caught up in building one silo out 100%. It's actually better to say, well, what 20% of things all across the board are going to deliver 80% of the results? And let's focus on those. If time allows and you have the resources, you can always get to that other 80%, but focus on the things that are going to give you the most bang for your buck. As you were saying with the whiteboard and figuring out what's the lowest hanging fruit, easiest to implement, what's going to give us the best ROI on time invested. Those are the kinds of discussions. So that's where I would start for system.
This is a great discussion and time to start because, as you know, most business owners, you're working in a bubble, like not really taking studying what's happening outside worlds, like you saw on the grind. This just not even looking to work on your business, is working more in your business.
Yes.
And I usually tell clients that buyers, they're comparing apples with apples. So if you're in a HVAC company, a plumbing company, name the company, they're going to compare. So you may have two companies that have the same revenues, and you spoke about profitability, right? If one has a higher EBITDA or a higher profit margin or higher earnings than the other, which one is better, right? Or maybe the other way around. Maybe a company with one company doing 10 million, one does 20 million, but a $10 million company is more efficient, has higher margins, more profitability. And he spoke about owner dependency. Now, is it worth it to get your business to 20 million and now you come back and you're working as a slave to the business? You can't take time off. Nothing moves unless you say it. You have to sign all the checks. You have to be there to do all the trainings. You have to do all the quality control, pay the bills, collect dues and whatnot. So those are two big ones. So I love those two examples of profitability and owner dependency. Yeah. Can you share, do you have a story? I know you've been doing this a long time. You have an example of a success story or a company that been through this process and met their goals?
Actually, my story is my own. Although I do work with companies on exiting and we're getting some great results, don't get me wrong, but with the company that I owned and exited in the cannabis space, the company that purchased it, when we asked them what interested them in the company, why they decided to go ahead, they said two things. They said, you have one of the best teams in the industry, and you don't find businesses that are turnkey, and you've put together a turnkey business. So it's a combination of having the right people and having the systems that allow that. So that's what made us stand out. That's what earned us a higher multiple than we would have otherwise gotten for the company, was that systemization and having great talent.
So you mind sharing what's the difference in the multiple? Let's say, what was the gap? Let's say you didn't implement what you did. What was your multiple then, and what was the actual multiple at the tail end? What's the difference between the two? I'm just trying to quantify.
Yeah. So to you know, in my experience, what I've seen, not just with my own company, but others, is that you can go from middle to high end. So let's say that you have a range and your multiple range is 2x to 7x of your earnings before interest, taxes, depreciation, amortization. So 2x being the low end, 7x being the high end. And the average, let's say, is 4. So having that systemization and process can take you from a 4 to a 6. It can pretty substantially increase it. And so for us, there was definitely, cannabis is a special industry, so the normal valuations don't, it's different. The multiples are generally higher than other industries. So that being said, probably we got, I would say probably about a 50% bump because of that.
And it's important when you can quantify that, because for a client that's looking to invest the time, resources to bring someone in, right, to enhance their value, turn their business around, make it scalable, make it more team run, make it less owner dependent, and you can say, hey, it's going to cost you X, right, to get your business where you're at, but this is what you're going to lose if you're doing that. You're going to leave money on the table, right? You're going to go from a company that's is going to sell for, in this case, of a 50% increase in multiple, could go from selling either from a $5 million to a $10 million company. So you could be leaving, $5 million on the table, right, by not implementing. The challenge I have, though, and it's being transparent, when my client, when they come to me, is like they're very they're stressed out, has a lot going on in their lives. I like to use a used car analogy, right?
Okay.
So that if you have fresh paint, detail, new tires, just a nicely clean car, you probably get a little bit more. But most people, I don't have the time to do all that work. I'm just going to sell the car as is. And just by making some, some quick fixes, you can get more a purchase price for your car. In this case, for your business. And we went back to talking about what you can get the quickest return on, the best returning investment as far as time and resources, and turning your business around. There's some quick things you can do. And I'm just curious to know, like, if an owner, let's say, wants to sell their business within a 12-month period, what is one thing you would recommend that they focus on? I mean, obviously we deal in hypotheticals here, but between profitability, minimizing risk, removing owner dependency, getting more scalable, or even in the marketing. So you either increase your top line revenue or you cut expenses. What's one thing an owner should focus on if they have a very short window to exit their business?
Yeah, I would argue that if there's a short window, focus on owner dependency, because you're not going to be able to, it's unlikely that you would be able to substantially increase the profits enough especially because generally, yes, companies that are buying are looking at the current trends and year over year increases, but a lot of it is being done historically. So they're looking at last year's. So it's, so I would say if you have a really short time frame, then I'd say owner dependency. If you have, 12 months is kind of in that middle range where you might be able to move the needle. If you have 18, I'd say focus on profitability. That's just my personal perspective. What would you say? I mean, you deal with this. This is your stock and trade. So what have you seen? What would you recommend?
So I always want to know who else is in the company. Who's your number 2 person? Who's your right-hand person? Is any interest in them actually running the business? Because, believe it or not, Stephanie, I actually don't want them to sell the business. You might not believe me saying that, right? But, no, truthfully speaking, because my personal belief is, like, why would you ever want to sell your business, right? Most assets appreciate over time. Real estate, stocks, same thing for business. Most businesses has a growth rate, 7-8%. Some businesses much more, some maybe a little bit less. But businesses, if it's run right, it grows. So you have essentially revenue, cash flow you're going to generate year over year, and there are tax benefits to owning a business, right? I've been doing this a long time. Legacy is very important to a lot of business owners, so maintain that legacy. So number 1 is having some sort of succession plan. Who already in the business can take over the company if one of the 5 Ds was to happen. We know what the five Ds are, or any family can take it over. They usually come to me when those options are off the table, and we have to go to third party, family offices, private equity investors, other strategics. But if you just think about this for a second, right, Stephanie?
Mm-hmm.
We talk about your suggestion was making a business not codependent or not dependent on the owner, right?
Yeah.
Would it be difficult, right, to, if there's enough profits in the business, to hire a general manager or someone to run the business? Are you slowly start taking time off? Start taking Fridays off, Thursdays off, and slowly start scaling back. Now you have your time, your energy back to focus on philanthropic stuff, focus on family, golf, and whatever. The business is still operation. You're checking in 1 to 2, 3 days a week. In my opinion, that's a perfect scenario.
It's so funny you say this, because I
Yeah.
cannot tell you how often someone I meet tells me they want to sell their company, and we do a deep dive on their business, like a advising session where we take a deep dive and look at where they're at now and what their goals are. And so we model it out and say, okay, you want to get X value from it. Here's what you need to do. And when they realize that the same things you would do to successfully exit a business and get the multiple you want are the things that would allow you to have your life back, would allow you to treat the company as an investment or an annuity, 9 times out of 10, they say, well, I don't know that I want to sell, especially when you deal with industries that have a low multiple. It's like, if you have a 3x multiple is really standard in your industry, you keep the company for 4 years, you've made more than you would selling. So, I'm just nearly laughing, because so many times people say they want to sell because they're burnt out, not because they actually want to sell. Some people are a situation where they need to and really want to sell, and that's great, but that isn't the right path for everyone.
And that's what you said right there, burnout. No more, I'm burnt out, I'm tired. I've been doing this so long. I want to retire. I want to get out. Yeah. My kids are attorneys, they're in marketing, they're doing something else. They don't want to be part of the business. My employees can't afford the business, nor they don't want the responsibility of running a business. And a lot of times there's health reasons too as well, where, they physically just cannot continue. So that's why they hire companies like us. But before they get to that, being proactive and working with someone like yourself and just getting ready, putting these systems in place, like all what you talked about, so you can maximize, and then you can sell on your own terms, right? Mm-hmm. You have this plan, you just can execute it when the time comes. I like to talk about challenges, because we're making it sound like this is, simple, right? It is sort of simple because this is stuff that we do, but there are challenges that come about when you're trying to put together a process in your business, right? Yeah. Maybe you could talk about some of the common challenges that businesses face when trying to streamline operations, and how they can overcome them.
Yeah, absolutely. So I think that one of the biggest blind spots I've seen is the idea that it's sort of like Field of Dreams. If we build it, they will come. So it's that same kind of approach of, if we create a system, it will be followed. And so building tools and processes is 50% of it, but the other 50% is implementing and getting the team utilizing that system. So that can be a problem of change management. Change is hard, and it can be a challenge to put in a new system when people are used to an established way of doing things. That can also be a problem with not having the right people. So sometimes in the process of putting these in, you realize that the people that were the right people to get you to where you're at now are not necessarily the right people to get you to where you go next. And then I think the third piece of that can be a challenge of buy-in, which you can alleviate by incorporating the people on your team into developing the systems and processes. That creates a lot more buy-in. So I'd say those are some of the big ones around that blind spot. But then another blind spot is making things too complicated. The whole point is to make things easier and streamlined. So, making things overly complicated. And then I guess the other big, not blind spot, but area would be sometimes lacking the financial resources or the right tech stack to fully solve some of the systemizing challenges that you want to. So that means you have to prioritize, and you have to pick the ones that are going to be the most impactful.
The buy-in is a good one. I think it starts from the beginning when you're developing, what's your culture about, what's your core values for your company. So as soon as from day one, even before they even start the company, they know about you. You probably have some videos, testimonials from past employees. Is this what it's like working for this company?
Mhm.
And then when they join, they have this 90-day onboarding process and rules and opportunities to grow within the company. So it's already in their mind, hey, I am here. I can get from being a tech or service manager. There's opportunity to grow and so on. And then the management as well. To me, I think the toughest part of running any company is that workforce management, dealing with employee issues and compliance and this
Mhm.
culture, and that's a tough one. So that's having someone can come in, whether it be an HR professional consultant,
Mhm.
that can help you build a company that has a great culture and great processes for onboarding, and working with your employees, help them grow, and empowering your employees, as well. I think that's the toughest, but everything else is easier to change. The finance aspects, dealing with people, that's more challenging. Uh,
Mhm.
we are getting to the tail end of our talk, and I feel we have like so much more we could talk about.
Yes.
Um, and for those of you that are listening live, and for those that are watching recording, if you like, if you still have time to put your questions in the comment box, we'd love to get back to you on that. The question I have is talk about your role
Mhm.
uh, as a fractional CFO,
Mhm.
and explain, how you can be of benefit to a business owner that's looking to prepare for an exit or just grow their company in general. Like,
Mhm.
fractional CFO is got people getting familiar with what that's all about. Maybe you could probably share the importance of having someone like yourself work with
Absolutely.
your company.
So I do fractional CFO engagements with companies as well as standard business advising, depending on what the company needs at any given time. And as a business advisor, I help companies to recruit great teams and have build high performing teams, systemize their business, as well as increase sales conversions and drive more leads to their business, use financials to make smart decisions, really listening to the story they're telling us. So, as a business advisor, I could work on any number of those areas with a company, depending on what is needed. And as a fractional CFO, I focus exclusively on the financials, nearly exclusively on the financials. And so that's, for companies that are larger, and we're talking higher in the seven figures, 8-figure range, and they have need for somebody with financial expertise and acumen, but don't necessarily need somebody full time.
Mhm.
And that can involve everything from establishing ground rules around how to utilize financial resources, cash in the bank, debt structure, etc. It can include maximizing the use of working capital. It can involve uh, setting up systems for better visibility into the financials, whether that's dashboards and KPIs. It can involve setting up cash flow forecasts for companies that run on an accrual basis. There's so many things that it could be, but bottom line, it involves making sure that the owners understand the numbers of their company and make awesome decisions with it, and then can maximize the value of their assets and their equity. So
Awesome.
hopefully that gives some idea.
It's important. I work with a fractional CFO myself, and
Mhm.
you just don't know. I mean, making plans for new hires, making plans for expansion, assessing your capital. Should I put the money back in the business? Should I buy a building? Should I bring in more talent? Should I invest in other opportunities? Open up a new division? Like,
Yes.
I have three rules that I live by, Stephanie.
Okay.
In anything that I do, it relates to business entrepreneurship. Whether you're hiring someone, whether you start a new venture, whether you start a business, whatever the case may be, it always starts with research, right?
Mhm.
Education. That's always start. Whether you start a new business, looking to hire someone, or enter into a new space, getting all the information you can on the subject matter, all the details you can, doing your research, making sure that this is something you want to, yourself, you want to pursue. And number two, I do believe in having awesome and trusted advisors, right? Because there's only that much you know. So like what you do this for a living. What I do for a living, right? You put a
Yes.
lot of years into it. There's like this a lot of wisdom, experience you learn along the ways. It's really impossible for someone to come in and learn this in a short period of time. So you have the book knowledge that you've done for your research, but secondly, you want to get folks in your team and build a team around your process. So there's different aspects you need to grow your company. You may need to hire an attorney, a CPA, a fractional CFO, start building your bench and,
Yes.
learning from that team. And you go to CEO, you're going to give direction, but you can get advice from your team. And then the third thing that you want to do is actually take action, right? So for those of you that are listening, connect with Stephanie. You're going to learn more about her processes and how she can help you. Make that phone call, start that business, take that next step towards, accomplishing your goals, right? And then, I'll add a fourth one. You want to give back, right? So when you have learned and you've implemented, now you want to help others along the way. And that's one of my passions, why I'm doing this, to learn from yourself, Stephanie, and hopefully someone that's listened to this can take this away and can help them in their business. So that's part of my passion and giving back. But as you close off, Steph, thank you. As you close off, Stephanie, any final tips, advice, or recommendations for those that are starting their systemization journey?
So I would echo the engaging expert guidance in the process with an advisor who's been through this before. But besides that, just to emphasize the Pareto principle, what 20% of the systemization efforts are going to generate 80% of the results.
That's
and number two, get the team buy-in, starting with your leadership team. Number three would be implementing is just as important as building the systems. So those are my top four. And, for anyone who's listening, if you are interested in getting a business value and health assessment and getting a 2-hour deep dive free of charge with me or another expert, a business expert, I'd be happy to set that up for you. Basically, we set up a 2-hour analysis of the company in terms of how to get it to your goals, which actually is preceded by you taking a survey, about 10 or 15 minutes, and it gives you a 25-page business value and health assessment. That between those two things, you'll have a really clear path forward to get to your goals with the business, whether that's exit or not.
I mean, that's awesome. I'm loving that. And by the way, Stephanie's information is in the comments, her LinkedIn page, as well as her website. So definitely get in contact with her. I would highly recommend that you take advantage of the offer, because you don't know what you don't know, right? There's stuff to your business, aspects of your business you might have overlooked, and Stephanie can help you with that. So, hey, Stephanie, it's been a pleasure. I feel like there's so much more, and I love to hear the war stories, and I don't, writing a book is something that's on my short list, kind of tell all the stories. I don't know if you have that in mind, as far as you have been through a lot, right? Especially yourself and your clients, you've seen a lot, done a lot.
I have.
People need to hear these stories. I don't know if that's something you've thought about doing.
I've not thought about writing a book. No. Maybe in the future, but but
you know what?
Just focus on taking all of that knowledge and helping businesses apply it. So
maybe we have a segment just on war stories. I mean, let's talk about crazy
absolutely.
scenarios. And we have to protect the innocent and not name companies and whatnot. But those stories,
crazy stories. So
in Vegas, right? It says, if it's not crazy, it's not Vegas, right?
I mean, it could be, actually, this is nationwide, different companies that I've seen. Sometimes it's shocking, the things that I've seen. So you're talking about businesses not operating with permits. I haven't seen that yet, but yeah, I mean, that's just sort of mind-blowing and shocking. So yeah,
I have. In this case, we wasn't even aware that they needed a permit. So it's crazy. It's the stuff people just don't know.
Right.
It's crazy.
They didn't realize they needed workers' comp insurance and that they could get shut down for not having it. Things like that.
Yeah. A lot of stuff.
This is why working with somebody that can help identify the blind spots that you don't know of. You don't know what you don't know. So
exactly. 100%. Well, Stephanie, it's a pleasure having you on. I appreciate you finally, being part of the program. This was recorded, so anyone that's listening can check the recording. Reach out to Stephanie. I highly recommend you take advantage of her offer, and appreciate when that's tuning in. Until next week. So next week, Stephanie, you're going to have a guest. We're going to talk about marketing, right? So when you're looking to prepare business for sale, like the marketing, the message, work on your branding and attracting the right people, and so on. So that's going to be next week, Wednesday. Is going to be our next guest on the marketing aspect of buying and selling a business and mergers. You talk about two companies, two different processes, two different cultures, two different messaging and branding. You're merging these two companies. What's the message going to be now, and how do you handle those conversations, right? So, company A, you have staff that's merging to company B. How do you share and have that the company or sold the company, and what happens next, and change management and all that stuff. So,
good stuff.
That's next week. So, to those of you guys want to tune in, that'll be next week Wednesday. But until then, Stephanie, thank you for your time, and appreciate you being here.
Thank you so much, Kyle. Really appreciate it.
Thank you.